it's a really interesting time to be a real estate investor and a real estate debt investor in Europe. I mean, in general, transaction volumes are down, and that tends to feed into debt investing as well. Having said that, with the banks and the sort of other traditional lenders having pulled back and sort of just being, less able to put out new loans recently, that's created a great opportunity on the lending side because there are a lot of refinancings that need to happen. So it's actually a great time to be a lender in Europe right now. We're able to, sort of underwrite things much more conservatively, allow for, a bit of price correction that might occur in the market. We're able to get, structural enhancements and things that are very protective that maybe we couldn't get, 18, 24 months ago. So it's actually a very good time to be a debt investor in Europe, and you can be quite choosy in terms of the deals and the borrowers that you're willing to back at the moment, which is also very good. Yeah, well, I think recaps. I mean, there's several things happening at the same time, right? So you've got interest rates, which are, very high, not in a long-term context, but certainly in the recent, sort of 5+ years, we've not seen interest rates this high. So I think that's one thing that, real estate owners are needing to get to grips with, is just how much higher the interest rates are now than when they took on these loans. So that's one element. Can the cash flow support that increased interest cost? At the same time, there have been elements of, lenders lending lower proceeds, right? So you have a certain equity gap coming through in a recap that maybe you didn't have before, where, maybe a sponsor needs to put in more cash, or maybe you need to get a mezzanine lender involved to help complete the refi. So I think there are several different things going on right now with the high interest rates, with the lending, let's say the lenders being more cautious, the banks pulling back, and also, in certain sectors, obviously corrections in real estate values coming through. So I think that's creating a really interesting sort of cocktail that makes the recap situation very interesting at the moment, and quite challenging in a lot of scenarios too, for borrowers to pull off. Most people are trying to get their heads around what's going to happen in office at the moment, right? I think that's the biggest sort of structural, change that has occurred, recently. We had that clearly with retail and shopping centers, a few years back, where you had this structural shift that changed the entire sector, probably forever. And, now we're sort of all wrestling with, hey, what is this sort of back to work, not back to work? What does this dynamic mean for office? Does it mean that all office is going to be forever, different, less occupied, et cetera? But clearly office is presenting some huge challenges for people. A lot of offices are going back to lenders, particularly in the States. But, I think it's hard to say that, hey, what's going on in the States is just a US issue. I think we need to be very cognizant that these trends, they may not be as pronounced here, but there's still things that we need to watch for here. So I'd say there's some certain very sector specific challenges also going on, particularly with office at the moment. Now, having said that, we all know that everything always overcorrects, right? Like nothing is sort of ever as good or as bad as it seems at the moment. So I wouldn't say that, that you shouldn't be investing in office. I'm sure there's going to be some great sort of returns to be made investing in office, whether that's equity or debt, but you need to be very smart and sort of know what you're doing and have a real strong conviction in what you're doing there, because things are definitely changing and that sector is evolving. Yeah, I mean, I think we still really like the living sector. So we've always been very big investors, I mean, for years and years and years, in residential and student housing, sort of in sort of active adult, so anything that's sort of living related, we're big believers in still. And I think just that sort of demand for that product is still fundamentally undersupplied, kind of nearly everywhere. So whether that's, built for sale, built for rent, I think that remains very interesting to us. Clearly, the the life sciences sector, I mean, that's just growing and growing and going from strength to strength. It's kind of hard to find, but if you can get your hands on it, that is also very interesting. We've also been very big investors in logistics. And, I think everyone sort of says the same thing now. We've been doing that for years and years. But I do think that the fundamentals on the demand side of that and the rent are still very much there. And they're very diversified, sort of portfolios usually, and that kind of diversified income. I think there's definitely a lot more focus on, cash flow at the moment, probably by most people, and just having that sort of sustainable, diversified cash flow that's really strong is going to be increasingly important, no matter the sector, as we go into this kind of climate. Yeah, I mean, I think, here in the UK, I think the projections are for a bit more interest rate hikes, before year end. So I think it's time to sort of be cautious, but at the same time, I do think, particularly as a lender on the lending side, there's tons to do. And so I think we will be very active in the coming months, particularly on the lending side. And I think a big part of that is just, we're seeing opportunities now where, we're lending at lower bases, like adjusted bases. We're getting better pricing at lower risk points than we did before. So as a lender, I think you can be very cautious and do some great deals in this environment. I think on the equity side also, there's going to be some pain points coming through. I think things could get more tricky before they get better, but that's always an opportunity on the investing side. As well. So I think, some of these recaps, some of these borrowers who get pinched on their refis, get pressure from their lenders being too aggressive, whatever it is, I think that all kicks up really interesting investment opportunities if you sort of know where to look and you're not in a rush and you're prepared to be patient.